Alrighty. Doc from North America. Good morning, good afternoon, good evening. It's nice. I thought it was Tuesday. It's not. We're already on Happy Hump Day. So that's that holiday week. And we will be seeing that same situation next week at the same time with the New Year's starting off on planet Earth when it comes to the calendar that we use for majority of the people. And I guess the whole planet basically always looks at it this way with this particular calendar. I'm surprised the liberal leftist, recreate the world people start demanding changing the calendar. I'm sure some will do that. But anyway, welcome. It is the last week of the year. We're looking at what we have up on the screen. We have the dollar index up there. You can see that trading at the par 99. Kind of made our case yesterday about how we feel the dollar will drift, break the century mark again, and play with the bottom, but it does it at a very slow, like a glacier moving slow. Over here in America, people are walking around saying the dollar is crushed, it's down, it's being beat up, and I'm thinking to myself, as a currency trader and watching the currencies for 4 or 5 decades now, and trading the currencies 4 or 5 decades now, the dollar is very firm as far as I'm concerned. I mean, we've gone from an all-time high of the index, measuring it that way. Some of you out there remember the euro in the 145, 150 area, and the euro at this point is trading, I guess, in the teens, or I don't even. And I look at it every day. We talk about it every day, and I don't. In the end, we really don't, stare at it and go, oh my God, it's trading at like what 110. It's just breaking into the teens, and our dollar is trading, at par 01 basically. As you can see it up on the screen on J4X there, it's 99 point. I'm sorry, par, what we call 100 or par. 0.999, and the Americans are running around like their heads are cut off. Oh my God, our dollar is worth nothing, they're saying. Well, I think the dollar is worth something, obviously, and it always surprises me with that crazy, hey Janos, crazy attitude about it all. Nobody around during this week. It seems like it, but you know what? Looks a little bit more active than yesterday. Let's put it that way. Everybody's supposed to be on holiday. When I was a young whippersnapper like you, back in my day, I remember when Europe would close the trading at the beginning of Christmas Day and not reopen. I remember the Swiss wouldn't start trading till like 3 days after the New Year, and in England they would start trading, a day or two after New Year's. They were closed the whole week, so it got closed at Christmas and didn't reopen. The London Exchange wouldn't open up until New Year's. I remember thinking about, and that would, oh my God, it would, and then remember I was at a full service exchange. We traded stocks. We were the oldest stock exchange in America. We traded options. We were the second largest options exchange in America. We traded currencies, and we traded cash currencies, which made us, we trade them as options, and we were the largest options exchange. And then the Chicago Mercantile started trading futures on options, and we were trading options on the spot. So we had like 2-day deliveries for all the currencies minus Japanese yen. It took 3 days to deliver that, that type of thing. So, I remember those days, the currency exchange, oh my goodness, it was dead back there. And I used to roam away from the currency exchange and go trade somewhere else for the week because it was so dead. And because of the option market, we were taking volatility and increasing it. We didn't have a VIX back then, but we followed individual volatility on the options. And so, I remember telling, Mike Santoli, head of, Yahoo Finance. He would back then he wrote for Barron's and Wall Street Journal. and he would have an option section on the weekends. They had an option section, and they'd come up with some statement, and I'd be like, no, and I would email them. Back then I could email, and I would email them and say, no, that's not the way the options work, and that's not the right volatility. And then I would tell him, and that's why he's very good at option volatility and so forth and understanding the markets. He's a true student. You can trust his finance. If you're looking for information, him himself, when he's saying something, the odds are, for a long while, he knew that I would jump in and tell him that he's wrong, and then I would explain to him why he's wrong. So he wouldn't print stuff that was off course. But so we didn't have a VIX, but I did, because I was trading the S&P 500 back in those days. I was a member at the Chicago Mercantile at the same time. And so the S&P was trading, and I would trade the options there, and I was trading them out in New York, and the New York Stock Exchange Index, and doing the arbitrage. And so and at the same time I was trading currencies. Back then I traded the Deutschmark, and I was trading mostly the Deutschmark more than the British pound or the yen. I trade the Deutschmark. It was the definite pit to be in. So this time of the year, it was kind of interesting, this week, it would be closed right now. There'd be no action at all. So this is action compared to what I'm used to. You youngster, you. Oh, what do we got here? He says, I would enjoy a week off. So would I. I don't mind them shutting the exchange down for a week. I'll take it. And we got the watch and cover news and currencies. Yeah, exactly. Hey, Doc. Hey, Julian. How do you see the 30-year bond? Good question. I still send it out on weekends, is it? Or do I do it? I do that on that. Janos gets it, too. I send it out to a bunch of people. Well, basically, mostly floor people. All the old floor people still want to follow my 30-year. So let's go take a look at the 30-year. See, Julian, we like to jump around. We have no problem at all. And we'll go back to the dollar after the conversation we have on the 30-year. I was talking about it yesterday. The Federal Reserve the Fed futures contract is reflecting 6 cuts. We had that conversation yesterday, but let's get it up on the screen here. And let's get that 30-year. Where are you? Oh, I know where it's at. It's right there. It's, I'll tell you this. If there's anything out there acting like the old days, it's the bond market. You can see wait, here we go. Here comes up on the screen. Let's put it up here. Here's the 30-year. And you can see the 30-year. Look at that. It's pretty much flatlined. It's trying to do something. We went into the daily sell here yesterday. No, that's Friday. So that's yesterday. Let's get it up there for live today. It went into a daily sell, but you can see the weeklies underneath it. Awful strong. Not letting go much, There it is right there. Well, it's lifting up today. You see that little bounce trying to evolve. Let's widen this out for you, too, just to look at that week. You can see here we hit the 125 area. I think we talked about that, getting up to the 124 or 123 and a half, something like that. I don't know. We've all gotten as high now as 125 back on last Friday. We had a green and a red, and you can see it backed off. Then, why does that say 20? That must have been it. That was Thursday. So that was Thursday. That's Friday. And then there's the days are screwed up because I had to just adjust it so we get it live. Let's see if we can fix this again. That's the data feed itself. Let's see. Let's go with that. See what happens there. Does that straighten it out? I think that does. Does that? Yeah, see, that doesn't show today. So we want to go like this. We'll get it figured. Let's give it which feed. I have to choose the right session feed or it doesn't collect everything. It drives me bloody crazy. Right there. Let's go with that one. See if that'll do it. It's the electronic market. There you go. Okay, now it's cleaned up. All right, so there you'll see it says 22nd. That's the 26th. That's the 27th. There we go. And so we move that back over to here. Okay, yes, that's right. So on Thursday of last week, It went up and hit almost the 125 area. What was it? 124.27. Is that right? No, 124.30. Remember, they trade them in 30 seconds. They're still trading them in fractions on the bond market because it's not really a listed exchange. Only the futures contract that we're looking at is on a listed exchange. The bond market, which is the biggest market in the world, 100 times bigger than the stock market. Not like 2 times bigger. Like it's like 100 times bigger. And it trades in 30 seconds and 64ths, actually. It gets even worse. And so right now, you can see it went up to the 30 and 30 seconds. So it went up to 124 and 30 seconds. Or if you're trading in 64ths, it's basically, what is that, 4. So it'd be 124 and 64ths. Is that right? Or it's the other way around? Yeah, that's right. 64ths, yeah. And sometimes they'll trade them in 1830 seconds or, something like that, And you can see the low there is 123 and 30 seconds. And then that was Friday. And then here's Monday. You can see it's still trying to lift up a little bit. But it's a holiday market at this point. It's very quiet. I saw there was a bond auction yesterday. I think it was a 2-year bond auction. The Fed, now has bond auctions like 3-4 times a week, if not 5, something like that. So right now, it's still looking fine. It's still in the weekly buy. Remember, when this is going up, interest rates are going down. Remember, it's the reverse. You're looking at the price of the bond, not the yield of the bond. Don't start me on quantitative easing and minus yields and so forth, but that's what we're looking at there. So you can see it's been, it's got the holiday market in it, like it always does. All right, now let's go over to Janos. Janos says, Julian, you mean the bond or the U.S. 30 index? Oh, I interpreted what he was saying as the bond. Let's see. I would enjoy a week off. Oh, maybe you're talking about the Dow 30, right? Are you talking about the Dow 30? So the USA 30 index. You mean the Dow? Yeah. Yes, sorry, I mean the Dow Jones. Okay, cool. We'll jump over to there. Oh, I had a chance to bitch about bonds. That's good, Julian. I like that because I love bitching about the bonds. Most people don't understand the bond market. And so, when I get a chance to talk about the bond market, I can complain. When you don't understand what I'm complaining about, it's no fun. I like to be able to complain when you understand what I'm talking about. All right, let's go look at the Dow Jones Industrial Average is about 13% up for the year. Let's put that up there. All right, let's get that up there. The Dow 30. That's how I got my name. I was told that I was the doctor of the Dow. I walked on the trading floor one day, one of the exchanges, and they said, Doc. And I looked at them and I went, what? Yeah, you're the doctor of the Dow. I said, I'm the doctor of the Dow. Okay. All right. Funny. And people on the trading floors would start calling me Doc. Let's see. And then if I went to a foreign exchange, not a foreign like outside the United States, but if I went to, say, the New York exchange and the options traders were around, they'd be calling me Doc there because they knew me from another options exchange. And, option traders were moving around the country at the Chicago Board of Trade or so forth. They would, the American Stock Exchange had an options exchange, and people were like, it's Doc. He's Doc. What is he, Doc? I'm Doc of the Dow. Okay. All right, let's get the Dow up there. Where's it at? Right there it is, right there, the March contract. You can see it did that thing on, what was that, on the 20th, there's the 26th. So it did it on Wednesday, it dropped, and then it's been slowly trying to climb up. It did go into the sell there. Did it go into sell? I guess it did. And let's put that on there like so. And then it jumped back into the buy yesterday, right there. Same thing with our S&P. And let's take a look at that S&P for a second just to confirm it. Because I remember that yesterday. It had been in the sell. So that's correct there. And so you got that weakness. Put it into the sell. Still in the weekly buy, though. You can see all that strength. So, it went into that weekly buy back in, see, this is the March contract. So you know what? We don't even use this one. We use the one that I used on the paper. Let me just go like this. Open workspace. This is the one I pay attention to more. Right there. And that's the one I send out and I put in LinkedIn. I post it every other week or every week. And there's the September contract, and I can explain some of those lines. And there it is right there. So yeah, right there. There's the sell there. And then we went into the buy yesterday. And there it is right there. There we are. And so you can see here, it went into the weekly buy back in here in the 34,000 area. It's been in the buy since. These little dotted lines and so forth is a signal I invented back in the early 80s. We refer to it green dots up and green dots down. Now, they're different than the dots that you see today on the individual product and how I use the Hinky-Ashke on the J4X. What they do is they look at the theoretical high versus the theoretical low, not the actual. But if you took every Dow stock and looked at the theoretical high, not the actual high, but the theoretical. So in other words, there's a theoretical high and a theoretical low that's different from the physical high and the physical low. All right, let me see if I can explain that again, because I rarely have anybody ask me anything about my namesake and the markets and why I've been doing this for 45 years and so forth. There's a theoretical high and a theoretical low, and they take every individual stock and look at their high and their low separately from the index itself. And so the index is a divisor index. It's not a, so in other words, if Microsoft goes up $1 and which is in the index, and say, let's see, say Honeywell goes up $1. Now Honeywell probably trades at like $130 a share, and Microsoft trades at what, $400 a share or something like that. So in other words, if in the S&P 500, the $400 stock has more effect on the index because it's a what they call a cap-weighted index. The Dow Jones Industrial Average is a divisor-weighted index, and so it will generate a different price. So in many ways, the highs and lows. Let's see, is this really right? I'm mumbling. I'm saying this out loud, so I'm not. I'm thinking about it at the same time. All right. So when you look at the S&P 500, when Microsoft goes up $1, the index goes up more than $1. Okay. When Honeywell, who's probably like the 10th largest company in the world, something like that, when that goes up $1, and it's a $150 stock, it doesn't go up the same amount as the Microsoft does because it's cap weighted. Because they look at the capitalization, the amount of the stock itself. The Dow Jones Industrial Average with the same two products in it, there's only 30 stocks in it, but it's a divisor index. So when Microsoft goes up $1, it's the same amount of effect of the index as Honeywell. So if Honeywell goes up $1, then it's like a $9 move because it's set up as a divisor. So it's the dollar itself is calculated, not the price of the stock. Okay? Whereas when it's in the S&P 500, it's the value of the stock that's calculated, not the amount that it goes up. That's the way it works. So let me say that again. So when the S&P 500, a stock goes up in the S&P 500, $1, it depends on what the price of the stock is itself, and it gets calculated that way. But when it does it in other words, if Microsoft goes up $1, it's a bigger number than if Honeywell in the S&P 500 goes up. It's not equal, but that's the best way to describe it. It's not equal when both of them go up $1. The Microsoft adds more to the index. The Honeywell adds less to the index, even with them both going up $1. Okay, there you go. That makes sense. All right. Now, the Dow 30 is a divided index, or multiplied, I guess you could say it's a multiplied index. So the divisor, when Microsoft goes up $1 in the Dow and Honeywell goes up $1 in the Dow, it's equal. It's the same amount. The index increases the same amount. Whereas it works the same way in NASDAQ. The NASDAQ or the Tech 100, it's cap weighted, not divisor weighted. Matter of fact, all the indices are divisor weighted except for all the major ones. And then I invented the Internet Index, WAY, and the exchange wouldn't pick it up, but the Securities Exchange Commission gave it to me. They approved it, and so no one would pick it up, and so it was never used. And then Jim Cramer took it and created the DOT, the Internet Index, and it's a combination of both. It's a combination of volume and cap weighted, and it was based off of liquidity. I invented it that way. So the Dow 30. Now you really took me down the rabbit hole. Sorry about that. So that's it there. So let me read the tape again now, because I'm done being in fantasy land. So Julian said, "You mean the Dow 30?" Okay, yes. So sorry, I mean the Dow Jones. I'm used to call it the US 30 because on JForex it's called that. Yeah, exactly. You're right. And I should have thought about that, but I'm so much more involved in the whole market. I think of it, when I see US 30, I think of the US 30 year. And if you had put a Y after it, that would have been right. I was wrong. You're right, because there's no Y after the 30. It should be the DJI 30 or the US DJI 30. So I asked the right person. Well, yeah, if you want to hear crazy, yeah, you asked the right person. So right now the Dow is, it's looking good. The theoretics are showing strength. The theoretical highs and lows. That's what those little dotted lines mean. And then when it changes, when the theoretical, I look at theoretical inside days and outside days. They're very insightful. You can see, and I refer to something as a new wave. It was like the Dow Jones Transportation Index went into a new wave, and it topped out and it pushed the Dow down. And then you can see here it helped settle the bottom, I guess you can say. And then we went into the weekly buy, and we were in daily buys, and we started building the strength, and then we started getting. Let's see if we go back to, here's the December contract. You can see what the theoreticals did. When you see, like, it went into the reverse in December, you can see when the dotted lines started to turn up here from, let's see, this is where it was moving down. Something's wrong here. I think it's like that. Let's see, like that. There we are. That, and there it is, like that. And then when it started to break through it, I knew that there was strength coming, and then I see my daily buys get going, like right here. This is the old December contract, and I knew a bottom was coming in, and I get my weekly buy, which is also based off of the same theoretical math. And see what I do is I use my theoretical calculations on all the indices. So, but the Dow is used to be my main, because that was the major index. So then you can see the theoretical high, I guess, took a while for it to develop this one right there. And then it did. And I think this was an outside day. And this was a outside day also. That's why I put little lines there, the green lines. We used to refer to them as green dots up and green dots down. I used to do this on a paper trade. I used to do it paper chart up until a couple of years ago. I was doing paper charts for 45, 50 years. Okay. I think Robin could confirm that. When I walked around on the Chicago Mercantile Pit, I had a little chart in my pocket. I was updating it every half hour. So, let me see there. I just took a sip of something. Sorry about that. I forgot I was talking. All right, so here you can see this is December, and that's a couple of weeks ago now. And you want to see conflict. Here's the September one. You see a lot of new wave signals, and those new wave signals are a pattern of volume. And in a new pattern, it always tells me something's going to happen, especially when they start doing this. And that usually I call it the corner. Like you're walking down the street and you come to the corner and you turn, and that was a corner. And sure enough, it slides down. You get this one, which ended right there, and it starts a new corner and starts to turn up, and then you can see the outside day right there, and the lines develop a trend line. And what it does is I draw trend lines to the inside and outside days of the theoretical high and the theoretical low. And that's what I do with that. So that's back in September. You can see there's some I have them all collected. Look at this, where it's going wild. It's the volume is shifting gears, and there's a corner and it goes down. And when I get a daily sell, I know there's going to be weakness, that type of thing, and vice versa. And it all combines together to increase. When you're using binaries and option spreads, it reduces your risk like 90%, 95%. And then what happens is that when you're using them to be long or short, if you can reduce your risk by 90 or 95%, well, it surely makes you more profitable when you're, if you can be 30, if you can increase your profits, if you can make more than you lose all the time, you're going to be a winner. That's pretty much what the answer to that is. So, all right. So there is back in September looking at the same kind of noise. All right. Now, let's fast forward to my reality of right now and your reality of right now. And you can see here, it's been very quiet. The volume has not been very shifting. As a matter of fact, the last one was right here on that last plane. Last week, there was no change of volume. You can see we went back into a buy. We're in a weekly buy, and it makes put a bull spread on, and chances are you're going to have money to buy good steaks. That's pretty much what it comes down to. Did that answer everything? Yeah, the little chart in my pocket I used to keep. It was like about a foot high, foot and a half high. Yeah, the little chart. I used to have it in one of my trading jackets all the time. Sometimes I'd, if I was making a trade, I would throw it in the top pocket, and you'd see it sticking over my shoulder, over my head. Yeah, it was not a little chart. It was about, what was it, about 2 feet wide? It was a scroll, yeah, exactly. It was like, it was a scroll. That was what it was. So in other words, it was a scroll because it went back, for a year or 2 years or 3 years. I could look at the different theoretical highs, because when you look at different theoretical highs and lows, and you look back 6 months or a year, you can see they seem to line up. There's a coherency to them, which is really odd. I've come up with theoretical ideas and practical ideas why that works, but more than that is that it works. That's the best thing out of it all. Yeah. Yeah, Robin I would be on the floor with them walking around, especially if I was doing the Deutschmark and I was trying to, because back in those days, the Deutschmark was the euro. Matter of fact, when we created a euro unit at one time in Philadelphia, but it really didn't catch on. What it did is it was the forefront of the dollar index, also / the euro itself. People don't realize the professionals wanted a competitor to the dollar in America. So in other words, people think, oh, you must really hate it. The dollar's being, something's competing with the dollar. It's like, no, we don't like being the world reserve currency. I mean, it's a benefit, but it's also it's a what do they call it when you say it's a blessing and a curse? It's a blessing and a curse, because our damn politicians spend money when they're not supposed to spend money because the dollar is strong. That's the problem. So we were always trying to create a competitive unit to compete against the dollar, so that we could have something to offset. Like right now, when was that? Did I show that yesterday or did I show that Friday, Robin? About the dollar is 47% of the world settlement. People buy things through the dollar. 47%, almost 48% of everything transacted on Earth goes through the dollar. And then the second largest in the world, of course, is the euro. It was like what was that, like 27%, something like that. And then China jumped up. It beat Japan as the third or fourth most active when it comes to transacting things. It's what was it, 4%? I think the world right now uses the Chinese yuan. 4% of the world now uses the Chinese yuan, which is a big number. Japan was always number 3, and then like Swiss was like number 6 or something like that, or 5, and China has started to beat out Switzerland. So it's not a lot though, but it's on an upward trend. So we talked about that. Was that yesterday? I think that was yesterday, wasn't it? Or was it Friday? I showed the index on it. There's an actual index. You can go in and take a look at the last 2 days of the webinars. It's on there. So, but we have always felt that if we act responsible by being the world reserve currency, our politicians wouldn't do stupid stuff. Because they spend money like it's nothing. I mean, they spend $2 more trillion this year than last year. Who spends $2 more trillion a year? Really. And I was just having a conversation with Robin about that. So when looking at the Dow Jones Industrial Average, it looks firm. It's trying to climb. It's doing good things. Went into a buy yesterday. Today, I guess it's rolling over, isn't it? Let's see. Let's go back to it on the other screen now, because I showed you the trend lines, and I could have 10 webinars on understanding inner mechanical functions of markets and cap weighted, and looking at them technically on the cap weighted versus the divisor, and theoretical highs and lows, and how they trend, and how the trends, you can look at them, and how when people go when chartists look at a chart and there's double bottoms and triple bottoms and things like that, it all coordinates together. It kind of goes into the concepts of Gann and Gann spiral, and then in Gann, once in a while Robin will say, my friend that does Gann, sees a 12-month important spot, and that's what those trend lines are doing, is they're identifying future important areas over time that we really don't see until it comes up on us. And so that's why some Gann people are like, they're playing for 4 months and 6 months and 9 months down the road, or 2 years or 5 years, and the markets go whoop, and the next thing you know, the markets are jumping like mad animals out of nowhere. All right, cancel. Well, I wanted to close that, didn't I? Yeah. So I'll go save, and then let's close. Close there. There we are. All right, so there is the where is it at there? Let's put it back up on the screen. So there it is right there. And so today, you can see it's relatively unchanged. It's up 13% for the year. The S&P 500 is like up 24% for the year, and the Tech 100 is up 44% for the year. So I'd imagine if they were divisor related, would they be higher or lower? I guess they'd be lower. That's what it comes down to. So when you look at the Tech 100 and it being up 44% for the year, it's more because of individual stocks that have more weighting, and it's almost like a self-fulfilling prophecy. That's the thing. That's why I like a divisor more than I like a cap weighted. And that's why I reinvented that concept, and the Securities Exchange passed it. Yeah, WAY. The highway. Internet highway. All right. What do we got from here? Then from... I hope did I answer your question, Julian? You sent me down my rabbit hole. I apologize for that. But I don't usually get a chance to talk about that stuff. And since it's quiet, I got a chance to ramble about it a little bit more. I would say... at this point, a lot of money managers are probably trying to just hold on to their profits and just wait for the shift. it's going to be a pretty dramatic shift going into the new year. Markets might get sold down. There's some feelings. What Morgan Stanley and was it? I'm not sure if they're talking their book or what, but some of the major houses are talking about a very weak first half of the year, and then they think that they're going to start seeing cuts in the bonds, interest rates, and so they're projecting 6 cuts, and that will influence the stocks because when you lower the cost of buying stock by borrowing money, you increase buyers, and that means more buyers and prices go higher. I'm trying to sell it too. Yeah, well, take your profits. In the 21st century, in the later part of the 20th century, you don't really need to if they're all big companies or good companies. You can go sell the calls and buy the puts, and you don't have to take the capital gain. Now, if you're selling to take profits on big wins, and then you want to at the same time sell the losers, see, that's where I'm always whine about taxation. Taxation forces trading. So in other words, you're selling stock. In other words, think about it. You want to buy low and sell high, right? That's what everybody wants to do. On the trading floors, we'd say buy low, sell high, get high. And so, but in the end result is you want to buy low and sell high. All right. So taxes force you to sell cheap stock that you really don't want to sell, but you want to take the loss so you can take the profits on the win on the stocks you made money on and not pay as much taxes. See, taxation, I tell this to people go, oh, they just grind, they get lost in the conversation. But taxes and the time of the year and all that stuff has an effect on the way the market acts. That's like when you have the, the farmer's, what is that? The Farmer's Guide to Markets and the Farmer's Guide to Weather. And, in other words, you have people looking at cycles. That's why they say sell in May and go away. They expect, it used to be before options, people would have to pay taxes and they needed to start selling in April. That's why they would say sell the stocks in May and go away, because and then you would buy in the fall because there wasn't options, and now they were doing the window dressing for the funds to make their investors think that they had the right stocks in their portfolio for the last 3+ months of the year. So all those rhythms and so forth before options had more of an effect. Also, as I was saying to Robin, at one point, up until Ronald Reagan in 1980, they started the options into the late parts of the Carter years. They started listed options. They had outlawed them back in 1830s or something like that. And so you could only trade them over the counter. You couldn't trade them at a listed exchange. And you can see what the difference is. You see what the bond market acts like compared to the stock market. It's 100 times bigger because it's not on a listed exchange. Took another sip there. So, where am I at? Oh, yeah. So, those colloquialisms, the little stories, buy in May, sell, go away. All that stuff was designed because of taxes and window dressing and, all that stuff, That was what that all was about. I hope I haven't driven anybody too crazy. Sorry I drifted off out of there. Shall we go back to the dollar, or do you want to talk about the stock indices, where they're at now? Let's look at the S&P. We'll put the S&P up there just because we've gone this far so far. And there's the S&P. It went into the buy also yesterday after going into the sell on Wednesday. And you can see here, it's been in that weekly buy, same place where the Dow Jones Industrial Average got going. We went into a daily buy. Let's move it over right there. And money managers follow the 50-day and 200-day moving average. It's like trying to follow the Gann spiral. It's looking way out, and it identifies tops and bottoms, and when to invest and when not to invest, that type of thing. But in these times, depending on where you live and the amount of taxation that's going on, you could basically just go sell the calls against the long stocks, buy the puts with the premium you took in from the calls, put the insurance on for free, and not have to take the capital gains and pay Uncle Sam or whoever you're paying in taxes. Anyhow, remember, these are all the decisions that have to be made by money managers. And smart individual investors think the same way. If anybody's bored from what I said, let me know. I'll change direction. I'll start talking differently. I'll go back to the old rhythm. We can go look at the dollar index again. All right. Since no one's complaining, I'm going to go back to the dollar index then. But if you want to see something else, I'll gladly go take a look at something else. I have no problem at all. You want to look at Microsoft? We'll look at Microsoft. You want to look at the euro? We'll look at the euro. I don't care. I'll look at anything. There is the dollar index again, showing that weakness. Did we even get a chance to look at it here? I'm not sure if we did or didn't. Here it is there, the dollar index. Oh, yeah, we were starting to talk about the century mark. That's right. You can see it's down on 101. It's popping up, it's at 101.025 on J4X. It's trying to break the century 01. It's playing underneath it at par 98 now. And it's offered at 101.02. It's up, it's kind of doing nothing. It's a holiday, so the markets are kind of trapped in that stall, All right, from there, we'll go over to the euro. Mr. and Mrs. Euro, there it is right there. You can see it's trying to break the 110. We expect to see it climb more. I'm sure, people in Europe are walking around going, our currency is shit. Our currency is shit. Because, it's way, way down. We've broken the par after all that time. So, I think Janos has asked a couple of questions like that, where would you park money for the next 6 months? Would you park it in European yield or would you park it in American yield, that type of thing? That's the level of sophistication now the world has an opportunity to use. That was only major funds when I was young. Individual people investing that way was very hard. It was very hard for individuals to invest that way. You had to have enormous amounts of money to be able to trade like a trader on the exchange floor. As you can see right there, that's the euro, and it's looking fine. Doesn't look like it's having any issues about anything. It's slowly climbing that hill, acting comfortable, firm. It hasn't taken, you can see the weekly refuses to go into a weekly sell. It's been very firm and very healthy. You can see it has a nice upwardly slope going on with it. It's been gaining against the dollar for a while, and it's to me that's always a good thing, is to take pressure off of the dollar to have to be used all the time, because it messes with our statistics. Janos did some videos about 4 or 5 years ago about fundamentals and how the fundamentals function now with quantitative easing and so forth, and how long they don't last. They used to go on for a couple of days. Now they last a couple minutes. With that, when traders and managers and are trying to understand the market itself, it messes with our volume. It messes with what they call the ones, twos, and threes, with the funds, the F1 or the S1. You can't no checking accounts versus checking accounts and savings accounts and checking accounts versus long term, like CDs, collateralized debt. Parked in a bank account. You know how everybody likes to count how much money is on the sidelines? Well, that's how they do it. They're looking at what's in all the banks and what's reported by the Federal Reserve every week. And when you have your currency as the world reserve currency, you kind of it gets cloudy because people are invested in it because it's being used in Turkey or it's being used in Japan, but it's not being used in Ohio or New York. And so it's awful hard to follow statistics of what's going on with the currency and investment, like savings accounts, how much money is put to the side. And when it gets to a certain level, then people seem to use it differently. and they invest in stocks, or they'll sell out their stocks and put it back into the bank. There's a lot of stats, and being the world reserve currency, it clouds our statistics, which can influence employment and so forth when you don't want it to. So that's why we complain about it as professionals. As most average people think, oh, that's really great. You're the world reserve currency. You can print money until it falls out of the sky. It's like, no, we don't want that. We're just happy to be a strong currency. That's it. We just want to be part of the gang. Not the leader of the gang. All right, from there we go to the cable. Cable's been looking firm, but it's been acting sloppy at the same time. You can see that the weekly here has been, it's been a nice move up from the 121-ish area all the way up to almost to the 128 area. That's a pretty good move when you go over back to the euro over the same time period. Let me just show you from the time period of the beginning of November. Let's put the euro up there. Since November, here, the euro is at 107, and now it's trading at, what's that, 10... Did I just put the euro up there? Yeah, I did. And the euro is trading at basically 1010 and a half, So it went up 3.5 handles. And the cable has basically gone, over the same time period, has gone up almost 6 handles. So, and it's not, the cable is not twice the amount. It's 1.27 versus 1.10 half. So 110 versus 127 is not 50%. And so you can see the cable has been firm, very firm. Matter of fact, when you go and look at the Euro GBP pairs trade, you can see it's the euro has been losing against the cable. Now this bounce here was very interesting from the 88 area. It's made a nice bottom in here. It started to bounce, and you can see we're starting to threaten the weekly there. So the euro is starting to firm up. It is definitely firming up, but it's not at the, up to the mid highs of November, and it went down. These lows here were what, 4-month lows. So looking at individual pairs trades and how they function and what is going on in their economy. This webinar is turning into a what you would refer to as a fundamental conversation. I just have a habit of combining fundamentals with technical analysis. And then I have my own proprietary technical analysis, which is even further off the reservation. So that's what this conversation is turning into, is a combination of fundamentals and technical analysis combined together. Matter of fact, Giannis, that'll be the title of it today. Let me just remember to put that down on the chat line there for you. But yeah, that's what we're doing now, and that's how people look. Used to be you would look at the interest rate and the inflation of what's going on in the European Union, and then you would figure out if you want to own the euro or sell it against one of the other countries who's doing poorly against it, or buy it because it's doing better against the other countries. So that is the way money managers and institutions and so forth, and they invest that way. They when you say, the big guys upstairs or the banks are moving things, that's what they're looking at. That's what feeds their justification to buy and sell. And then Giannis did a couple videos. I keep on telling him he should go put those videos back up again because I think they're so legitimate, and the fact that the story itself is important. Doesn't matter how accurate the markets are trying to follow those rules anymore. The fact that someone would talk about it is a nice thing. So that's been the conversation there. I'm just typing in what we just talked about so I don't forget. Fundamentals. Fundamental. There it is, like that. Verse technicals. I'm just going to leave it at that. I'm back to the webinar. Sorry, guys, gals. All right, so let's go back to the currency pairs unless someone wants to see something there. Let's take a look at the Swiss. And you can see there the Swiss, we've been saying this is looking very well compared to last year this time. They had to deal with Credit Suisse and the situation that put a lot of pressure on the Bank of Switzerland, the Federal Bank of Switzerland itself. And we saw it, we talked about it here, where the Federal Reserve were doing swaps with the Bank of Switzerland, to adjust and help Credit Suisse, and then they broke Credit Suisse up, sold parts of it to UBS, and I think they sold something else to somebody else, and they got rid of the problem. They had Credit Suisse had I guess they had swaps on or something. The same thing that hurt Deutsche Bank on a very small scale was hurting Credit Suisse. And so they can't even, things are so bad still with Deutsche Bank that they can't, they can't get somebody to buy it. They couldn't merge Commerzbank of Germany with it. They can't do anything because it's still in such a tough spot. We have the same thing in the United States. Citibank, the same way. It's in such bad shape that we can't get anybody to touch it. Whereas we were able to sell off Merrill Lynch and Wachovia and all these other things and Bear Stearns back in 2008. The thing is so bad that Deutsche Bank and Credit Suisse and Citibank out in New York, they were so bad that they have to just keep them alive by name. Okay, from there, Julian says, I try to trade fundamental and technical too. Yeah, it makes sense. I mean, fundamentals have value. Now, there's no doubt that the politicians have hurt the Bureau of Labor Statistics here in the States. And so they've, the unemployment number makes close to no sense here all the time. It's crazy. But, we're trying to follow inflation. Look at it this way. The politicians influenced the inflation situation so bad that in the first 2 years of or at least the first year and a half of Mr. Biden's presidency, inflation went from 1.41 to almost 10.0 to 10 from 1.41. And what did they say? Mr. Powell, Mrs. Yellen, presidents of the Federal Reserve around the country kept on calling inflation transitory. And when it finally got up into the sevens, they finally started to look at it and go, oh, I guess it's not going to go away so fast. And then they had to raise. I don't think rates have ever gone up so fast, so fast in such a short period of time as they did from 2002 and a half to 2003 and a half. They raised rates from minus to 5.5%, where we're at now. And then the markets, the bond markets, are what they like to call the bond vigilantes, since they have no control over them. That's why they call them bond vigilantes, is because the Federal Reserve has a hard time controlling the bond traders. And so, whereas everything else can be controlled or manipulated by the Federal Reserve, the bond traders are not so easy to intimidate. And so, because they're not a listed market, it's an over-the-counter market. And the Federal Reserve cannot trade that market so easily. They can trade the futures, like the U.S. 30 or the U.S. 10, that type of thing, But they can't manipulate it. So the fundamentals are really tough to deal with, and that's what Janos put those videos out on, which were really important to me, because at least it was somebody talking about them. They were rationalizing the whole thing. So anyway, sorry traders, let's do this. Before I leave, let's look at all the products so you at least can see them through the video. Okay? So there's the Swiss, from there is the yen. And the yen is still in a weekly sell, as you can see right there. And it's trying to go into a daily buy today as we speak, right there. From there, we go over to the great experiment, and you can see it's breaking through. And now yesterday it did not close at an all-time high, But today it is at an all-time high again on a closing basis. And it's one of the highest highs we've seen in a while. It's trading above that 32.5 area. Heading over to the South African Rand right there. We have South African Rand still on an upwardly slope. And we are flirting with a weekly sell. We went into the weekly buy last week. And, I'd have to laugh at that. Now we're trying to go back into a weekly sell again. Let's move that over right there. So there's the weekly buy. And now we're already trying to go back into a weekly sell with no problem whatsoever, which is bullish normally for the metals complex. So let's take a quick look through the metals complex. And from the metals complex, we go to, where's it at? Metals complex. Right there. We have, where the hell are you? There you are. Let's take a look at, there's copper. Well, let's go to gold first. There's gold. Gold is on that upwardly slope, and South African Rand is heading down, which makes total sense. And we're still in that weekly buy. Over on Beta, let me tell you what Beta is doing. Beta is actually flirting with the weekly sell, which surprised me when I took a look at it. Let's just show you real quick here. So I'm starting to wonder what the hell's going on there. There's the weekly sell. It's flirting with it today. Starting the week off from Friday's close on the weekly buy. Also, over on silver closed in a weekly sell over on our Beta, which is interesting in its own right. And it's the same contract too. So there it is right there. You can see it closed into the weekly sell last week, and it's still diving down from yesterday. And let's put it up over here. And you can see we are diving down over here on it right now. You can see it's in a daily sell since yesterday, and it's underneath at the moment, trying to get into a weekly sell. And that surprised me a little bit. And then we go over to copper, and copper is, which we always think of like you're looking at, what's it, China, because they use it there. It's still in the weekly buy, and it's climbing up towards the $4 area. I don't know if that's window dressing. We've seen them doing window dressing. I would not like get long copper more than just a couple days at a time. I would not. I'm concerned that copper might get sold down hard going into the new year, because it seems to me the Chinese, they've been seen window dressing for the last 2 months. They put out with 4 other central banks. They've been window dressing the stock market. So we've had some videos on that. We talked about it here. So you got to be careful there. What do you do? From there, we're just going to jump right over to energy. So let's just take a quick look at crude, Brent, and we'll get out of here. And oil, natural gas. There's the what do you call it? The crude oil, West Texas Intermediate, playing with the weekly buy. Then we go over to, let's put it up over here. What is it? That's we'll find it in a second. BZF, is it? I think it's BZF. It's Brent. Is that Brent? Yeah, that's Brent right there. And let's put it up on the screen on the beta. So you can see Brent right there is flirting. It's been in a daily buy for, a couple of weeks. And then you can see here, Brent is trying to break into the weekly buy, just like West Texas is. Then from there, we go over to the gas company in, let's see, where is it at? In Spain. Let's just look at that right there. And you can see that is feeling a little pressure on the daily right there. And the weekly is trying to move down. So maybe they're look at it. It's down in the, is that 26? Let's see if we can get it up on J4X, and then we're going to get out of here. No, where is it at? Right. I think that's it. No, that's not it. That's the natural gas in the United States trading at... No, that's it. That's okay. That's the energy company out of Spain. And you can see it's trying to move down from the 28s down to the 27s. So, all right, traders. We've had too much fun in one day. I'll say, what's Julius? Julian says, having the indexes at all-time highs, not counterproductive to the fight on inflation? That's a good question. How about if we answer that tomorrow, since it's already 8:30? But that's a good question. I like to. Oh, let me see if I can write that down, or you come back tomorrow and ask that same question. We can get involved in that. That would be very good. All right, traders. This is Doc from North America saying arrivederci. Let's see. Happy trails to you until we meet again, which will be tomorrow. Happy trails to you, to all our trading friends. Later, traders. Thanks for the great questions. Sorry if I drifted out into the ozone layer there.